Hey everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a look at the action in today's session. And Ed, it was almost right on cue. We were talking about how day after day over the last couple of weeks, we were approaching or hitting resistance levels, and now we're getting a pullback. And it was quite a pullback we saw in today's market with a lot of selling.
Yeah, quite a pullback, quite a reversal. Things were going nicely to start the day, and then things did not go so well. And we fell back through key levels. Nothing decisive. Again, if we bounce back, in a few days, nobody will care. In fact, this will be better shakeout in that regard. Right. So we sort of needed. Now the question is, what happens next? In any case, we're going to be taking a look at a few stocks: Vertex, Celsius, and JB Hunt.
Yeah, some stocks that did well today. One that really did not. We'll dig into that. But first, let's take a closer look at the major indexes. So today, worst off was the Dow, down 1.8%. We also had the Russell and the S&P down 1.6% apiece. The Nasdaq down 1.25%. So the least hard hit. But as you said, Ed, this reversal here today, pretty notable, with the Nasdaq finishing back below that round number at 11,000. That was an area we had pointed out previously with a lot of trading action. If you just draw the line back, going to last spring, summer area. But a pause here is actually not a bad thing to see.
No, not really, for a couple of reasons. One is that it was going to happen, and the more you go up and up and up without pausing, the likelier you're going to have a bigger fall when it does. Yeah. This is not like, at least so far, it's not like from October to say early December, we would have one or two good days and then we'd give up all the gains, pretty quickly. Now we've gone up several days, either 7 days in a row or so, or something basically over that time period, and now giving up some of that gain. So much easier to tolerate in that regard. So it's just a question about, does it sell off or not? And, right. You just have to be sort of wait this out to a certain extent, wait to, not really make new buys until we sort of see what happens. Do we, do this? And in which case we may have lots of new buying opportunities if we move higher. But if we keep falling, then we may need to pare back.
Mm-hmm. And even before the selling really picked up steam this morning on IEBD Live, that's what the team was saying, to be cautious about making new buys, because a lot of the best stocks from the start of 2023 were already up and out of there. And so at the very least, it would be good to see them pause, form some sort of handles, and the best way to get that to happen is to see the overall market itself to at least pause or have some sort of pullback. But we'll be keeping tabs to see where we go from here. As you said, let's look at the S&P 500, because the round number that it came right up to was 4,000. We can also play the connect the dots game back here as well, coming right down to the 50-day line and the 21-day line. I mean, it would be nice if it stopped there, Ed. We'll see if we can get that to happen.
Yeah, going below the 200-day line, not the worst thing, because it's not even super decisive getting through there yet. It's more of a bigger deal if it goes through the 50-day line, because then it'd be taking up a much bigger chunk of the gains. And getting through a lot of support levels at that point. So,
and this is the follow-through day here. So then it would be in danger of closing below that close.
And it would be going back to the old style of just when things start looking strong. Mm-hmm. Because where do you buy it? Well, you probably would have bought on late on that follow-through day, because things hadn't really moved. Right. And so a lot of gains might be wiped out at that point if you just get around to the close there. So yeah, I think this is in a key area. Again, we might go there, we might test that area. Might look, ooh, that doesn't look so good, and then things get better. But it's an important area right now.
Yeah, and then if we do get some sort of bounce or upside reversal in the coming days, perhaps the trick is going to be exactly where that happens, because if it happens right at the 50-day, then your ceiling of the 200-day is then right above you. But I guess we did have a little bit of movement here on a follow-through day that closed right up against a potential resistance level. So maybe if we do see a strong day and it's right up against the 200-day, maybe still, put a little money to work and then see how that resistance or potential resistance shakes out?
Yeah, and I think just being gradual in general, because that way, if you do have those reversals, you're not going, crazy. If you put a little more money to work, over these last several days, you're probably still doing all right. But if you really said, I'm going to ramp up yesterday or this morning, well, there were some big losses in many cases. So that's why just let the market draw you in over time.
Yes, exactly right. Okay, moving on. We'll just quickly look at the Dow ETF DIA closing below the 50-day line there. So that seems pretty notable, but still a ways to go before it gets to that 200-day line. And then small caps coming right up to those November and December highs before it turned tail today, coming down towards this 200-day line, but still for now above all of those moving averages.
Yeah, and just something to watch here. I mean, the Dow has been really leading, and so that was showing, it was a pretty sharp drop. Yesterday's drop was more about Goldman Sachs and Travelers, but there was a lot of losses today. And we saw it throughout beyond the Dow. We saw it in industrials. We saw it in commodities in a lot of places. So it's, XLI, that was a pretty big drop for XLI. Now, a lot of that's the aerospace defense. If you look at some of those components, it's not necessarily some of the other ones, not Boeing, but it's really more the defense aspect of it in there. But there's some pretty big in that component. But it's maybe the real world. I mean, we saw what got the market today? Well, it's Fed being hawkish and weak economic data, raising concerns about a recession. That either that we're heading there already, or the Fed's going to keep raising rates until we make sure we get into one. The Fed is, the market was happy to see, the economy slow down and get inflation down, but they don't want to see the economy go into recession. So I think some of that is catching up in there. Because look, the industrials have gone on a strong run.
Yeah.
These are cyclical type names, and they've gone on a strong run, even as the economy has been looking like we're heading toward a recession. So at some point, you have to say that's a pretty big gain in this kind of economic environment.
Right. We'll have to take the market action day by day. We know that the market is a forward-looking mechanism, so while also digesting new day-to-day headlines every single day. But best case scenario, we do get a bounce, but we'll also have to see, maybe this was just a short-lived bear market rally, or we could be in for more chop. I mean, I prefer buying on pullbacks and reversals, so maybe this could present here soon some pretty good buying opportunities, but only time will tell. Let's now take a look at some stocks. Here's Vertex, VRTX, holding up pretty well today, despite a lot of damage out there, down 0.7%, but got above the 50-day line in yesterday's session. And it seems like, Ed, it would be good if it could just pause here and go sideways and hold above that 50-day.
Yeah, you could have bought it yesterday as an early entry, breaking through the 50-day line. You could still buy it because it's holding up there, or you could wait for it to go above. But ideally, as you say, it'd be great if it could form a handle. I mean, technically, this is a flat base, so we don't really call it, but just have some sort of pause here, let it settle down, digest those gains, and then go. So that would be, if we could have the market go sideways or go down a little bit more for a few days, that could be very good for Vertex.
And Vertex was our stock of the day today, so make sure you check that article out on the homepage of investors.com. And next on our list, let's look at Celsius, because it did not have a good day today at all. A very terrible looking day, down almost 10% by the close. When we were looking at it this morning, Eddie, was down less than 3%, and at that time, looked like it was acting in character. I mean, it has, like right here, let's see, it was down almost 5% this day, and it looked, just like a normal little uptrend for the stock right at the 10-day line. But the selling did worsen throughout the session, and the stock is now back around that 100 level and below some key moving averages.
Below the key moving averages, if you bought it when it first broke above the 50-day line and the trend line, you're down. I mean, It's like, even if you bought it right, though, there's nothing to be said. It's like, so you could have bought it exactly right, and the volume was heavier than we've seen in a while, it appears. So there's just really wasn't anything, hang your hat on. Now, could this be a temporary shakeout? I mean, this does have the big moves, so maybe now it forms a handle, and this was a great shakeout, but it's not. You don't know that, and it's also a reason why you don't want to buy extended. Like if you bought it yesterday, it's like that was getting up there versus the 50-day line. At that point, you just have to watch out. And in that situation, I mean, it's much better to round trip at an 8% gain than to be down 9%
out of
the gate. And so, yeah, it might bounce back, but it's such a hole. I mean, this could it fall down another 15, 20%? Sure. I mean, it's like if the market pulls back some. So yeah, you have to be quick. It's definitely not, you have to, especially early on. And when you're buying these things, still have to be thinking about short-term profits, got to be thinking exit strategy before you enter.
So true, which I feel like is why we've really tried to be disciplined with those early entries and, treating stocks as like, guilty until proven innocent and, taking those profits into strength, as you said. So it seems like, as soon as we thought, oh, hey, maybe we're starting to get some traction, things are working, we see a stock that had, and still shows a lot of promise, get slammed like this. So it's just another reminder to be careful out there. And one stock maybe that had a surprising move to the upside today, Ed, was JB Hunt, which issued its quarterly earnings report, gained almost 5% today in strong volume, did not have a good number on the bottom line, saw a decline in earnings there, and also a pretty significant slowdown on the top line. And I know from what you were telling me about the report, it was not a good report for JB Hunt. They were down in the pre-market, so to see them really shake that off and rev up here is pretty impressive.
Yeah, I believe either on the conference call or deeper in the notes, they suggested that they see a growth down the road. I mean, so a rebound in freight, so that helped it. But this ended up being, I think, the best performer in the S&P 500 today, which is just like you would have never guessed that before the open. It's odd. Again, we saw a lot of commodity plays, industrial plays. We saw a lot of packaged food companies tumble today, all worried about a recession. So it's sort of weird to see all this. I mean, it's transporting it. It's moved sideways for quite a while. The RS line hasn't done terribly. I mean, it's gradually trended higher over the past couple of years. So you can see that, maybe it's had some runs. It could happen again. It isn't even necessarily the best one in there. So it is an odd situation. You could have bought, it's buying it off the 50-day line, bouncing it off there, or still close to the 200-day. You could, but I'm not sure if you'd really, want to. It doesn't seem like it seems like maybe you'd want it to have it rally up somewhere in there, or maybe come up, pause, do something there. But impressive. If their forecast turns out to be true, that would be a positive sign for the economy. But yeah, it does show you that you have to be cautious about pre-market on the upside or the downside, because there were some other stocks that looked really good before the open. Then they did not have a good day.
Interactive Brokers was one, IBKR.
Well, that one went up, and look at the intraday on that one. That one went all over the place.
I was a little surprised to see that. I did not check back in on that one. And then United Airlines. This one had a downside reversal.
Yeah, and that one had a great looking report.
Strong open gap up at the open. Yeah.
So yeah, it's like this was also an argument like don't buy extended, but you try to wait like at least 5 minutes, but maybe even half an hour to see. Sometimes we'll stock will get away from you. United was extended and wasn't viable, but sometimes you'll have a stock. Oh, I want to buy it. It's going to get away from you, but you're just over time probably going to be better off if you don't buy right at the open. If you wait a little bit longer and see how things settle out.
Right. Exactly. Well, Ed, earnings season is here, so we really got to be thinking about that. And also, so something with JB Hunt is you also have to look at some of the peers and, okay, are there group members moving in sympathy maybe that are a little stronger, and when are they reporting? So like TFII, for example, looks like it didn't hold up as well by the end of the day, but we're still seeing a blue dot in a couple weeks before earnings. So, this is one maybe to just keep on the radar, maybe not at the top, very tip top of your watch list, but earnings moves can also help spark stock ideas with other members of the group potentially.
That's a really good point. Now, I would also just say that's something else to keep in mind is that could really roil. Earnings season really is going to come next week. It was sort of slow this week. I mean, actually, but just tons of stocks over the next couple of weeks. So that could really roil the market, but roil individual stocks as well and sectors. So just keep that in mind. We're going to be in for some turbulence for good or ill.
Yes. But we'll always stay on the edge of our seats and keep our eyes peeled. Thanks so much, Ed. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IEBD Live. And we hope you join us with Ed as our host. Investors.com/IEBD Live for all the details there. We'll see you there. Have a great evening, everyone. See you in the morning.